Good day all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Tuesday, August 24th, 2021, getting on now to 5:50 in the afternoon, that's Central Time. Meme boys came out. Oh boy, some call it meme, whatever you want to call it, the Reddit group, and they drove GameStop crazy. AMC up dramatically too. I'm talking, these are double-digit big returns in the 20% area. Even Robinhood went up, what is that, about 10% on the day. So big gains in there, stepping over all the shorts to try to play those markets off the fundamentals. You got to remember, this is a whole new game for those type of traders. You saw the speech today, or the press conference by President Biden. It reminded me, unfortunately, of a terrible press conference. The issue that he was supposed to speak on is Afghanistan. Reminded me, remember President Trump would come out and he'd talk about everything but the issue at hand. I did this, I did that. Well, President Biden, I've gotten all these jobs, we've got the vaccines. The issue is Afghanistan, and we got our butts kicked. We're getting out of Dodge. It's that simple. He claimed 75,000 people. I've now been evacuated since July. They've got planes about 19, 20 a day going, sometimes every 45 minutes, and they're bringing out everybody they can. The problem is the Taliban has now said no more Afghans. None. We're keeping everybody else here. Game over. So the Americans can get out, but I would say that if you're not in the compound already in some manner, you're not leaving. Getting there will be your problem. And the G7 meeting today, the virtual one, a disaster. I'm sure that everybody was asking him to stay longer. We're not only leaving, the word is that 1,800 of our soldiers have already been pulled out. So we got a staff there of about 4,000. We're not prepared to fight. We're prepared to get out. Okay, I don't want to go into that. It's what it is, and you can all deal with that. Another thing that we have to deal with is what's going on in the House of Representatives. I think Nancy Pelosi is getting done what she can get done. Looks like it's happening, and they'll probably move forward with the vote sometime in September. That's what I'm hearing. Now, the vote hasn't, to the best of my knowledge, while I'm recording this, and I've been doing this for about an hour now on different recordings. I don't know if that vote passed yet or not. We'll see, but if she gets it done, she seemingly gives something to everybody without getting anything to get thrown out. So I don't know what that all means. Okay? It's politics as usual. As for the marketplace, well, ARK, another liftoff. So this market, another 1.3% gain. I was watching Kathy Wood today on an interview, and they are reinvesting in different parts of China, so they haven't abandoned it. You've sort of got right here an island bottom if you don't come back and fill that. It's a little early to discuss that it's happened, but it's certainly there at this point, which is another bullish faction. What that means is when you do these gaps, you've left people caught the wrong way here. Remember, often you have a short element as much as, and not as much, but you have a short element. People go and borrow stock, and they're betting the price is going down, and they'll pay for the borrowing of the stock, and they're betting on the price. Well, if those people are wrong, they got to buy their way out. They don't want to give up that stock that they don't own, so they got to get it back, and that's how they do it. So that could be bullish. You see that the pattern is lower low, higher high. The market is carved through very easily both the 100-day and the 18-day. Maybe it's going to the 200-day moving average of closes at 122.92. The next area is way up here if it does that. I don't know if it can or can't. I know the market's not in a trend. So you ended a downtrend, and I made that very clear yesterday in these videos, and the market's now moving back up, as I said, caught a group of people, and momentum's in their favor. You're nowhere near overbought. So will these people jump in and follow that and just drive it higher? They could. I wouldn't want to be short the market, but I don't see a reason that other than coming out for the shorts that people are buying it fresh. Apple still having trouble right at that upper Bollinger Band, but I wouldn't want to be betting against this. Remember, as we get into September, the new Apple iPhone's going to get released, and typically when it gets released, we get good numbers after that on people wanting to buy the newest version. You know, Apple devotees, and I am one of them, I wait every couple of cycles. I don't buy one every year. I'll tell you that. I can go 2 years, sometimes a third, but I won't go beyond that, and because the features are too new. And you'll get devotees like me having to jump in very shortly. And you always hear, well, should you wait for the next one? About every 3 years is right. That's what I've learned. In XLI, higher high, lower low, fighting right through here in the industrial sector. I don't see a trend at work. The semiconductor, we had talked that this market looked to me like it ended its downtrend right here the other day, and that was just Friday. The market broke this pattern of lower highs, lower lows. Now the key was, could it get over the 18-day average? It did it yesterday, and you're following suit. So the market lifting its head, saying, I don't want to be bearish anymore. And the longer term charts, you've got to take a look at. If you're one of my paid subscribers, when I do these in the morning, I often bring up the longer term charts as well. We talked about PODEX, lost its embedded reading, ready to run. Often when that occurs, when you lose this reading and the numbers aren't going sideways under 20 anymore, you make a run to the 18-day average of closes. Could be a mixture of that number falling a bit and price rallying to it, but it's a typical pattern. I'd be wrong in what I'm saying if you got back under 966. I'm thinking it's going to that number. It doesn't mean it's anything to do with it. And this is the psychiatry trade at work in ESGU. You go from the upper Bollinger Band to the lower band, right back to the other one, and you're overbought, you were embedded, you lost it, you got yourself down and came right back. Last week was the hardest week of trading I've seen for the whole summer, and that's what you're looking at. These patterns are in many of the charts based on that. Stock indices, absolutely that way. XLE today didn't quite get over the 48.79. So it's a market that had gotten itself oversold, had sliced through the 200-day average. You often don't do that. You'll often challenge that average again. You just don't leave it. It's a big one. So the market came back, and that's what you're doing. Now the question is, what do we have? Well, we still have a pattern of lower highs, lower lows. The resistance is here. At 48.80, you break the downtrend. I wouldn't be surprised if the pros were selling it today. That's what I said in my morning update. I think they'll hit that number, and they'll risk that 20 cents, whatever it is, to see what they have. Lower highs, lower lows in the emerging market, but you got down to the key numbers. Got to the 100 and lower Bollinger Band. What more are you looking for? This is what I teach in my enhanced Bollinger Band course. I think the pros come out on the first challenge of an upper or lower Bollinger Band. How much they come out of the position, if they're long or short, depends on what the momentum is doing, and I teach all that in there. So I have a market here that went back to neutral. The trend is still down until you take out 80.53 in this case, and today's high was 80.49. I wouldn't be surprised again if at that 80.30 level you saw sellers step in with stops at 80.54, risking a quarter on the trade. In the gold, you are into a lot of the resistance. We talked just this week. If you got through this 18, then the 100, the 200. I don't think you're going to make it right up to the upper Bollinger Band on this watch. I'll eat crow, but I think that you're overbought into a lot of resistance. And no, I'm not bearish, but I have no reason on an overbought market to tell traders to hang around. And when you look at the gold GDX, this is an important day. You were embedded all this time. I think the pros were selling this market on this overbought rally, and I think they got out today. They didn't do bad if they sold it up in there. The market still closed lower, but the reading's 25. Anything over 21, once you've been embedded, I tell traders out you go, and that's what I think happened. TLT, very overbought. Why do you want to go into this Fed announcement by Fed Chair Powell as he greets everybody on Friday at the symposium? The 2-year auction today was wonderful. It's an A+, as Rick Santelli would rate them. And, I love his rating system, but he's right. It was really well taken. Everything in the short end, foreigners are buying in droves that we're putting out there. So you ask, who's funding everything? I'm giving you who they are. FXE. Okay, You were down with an embedded reading, and when you lose the reading, you lost it yesterday, and I said, watch out. If you don't get it right back, and I mean right away, you're probably going to stay lost, and maybe the market makes a run to the 18-day average. That's what I think is going on. You know, you can learn a lot of this yourself, and we also have courses that teach things for you. So if you're a trader that looks for the different versions of things that we have, just go to our website, www.iraepstein.com. On the bottom right, it says free offerings. Click one of those and away you go. In the meantime, I'm Ira. I'll talk to you tomorrow.